Look, assuming that most analysts are predicting that interest rates should cap out around 5% for the near to medium term, I see the investment market here in Brisbane and South East Queensland on a whole very positively, in a very positive way. Markets such as Sydney and Melbourne, much more mature markets, I think will be conversely or more affected than us. That's because I think the prices are probably topped out a little bit there more than us. We had Brisbane and South East Queensland had a lot of catching up to do on those mature markets, and together with the strong infrastructure projects we have in place for the next 10 years leading up to the Olympics, I see that there will be a strong investor profile continuing in South East Queensland. In saying that, interest rates will affect the first-time buyers and I guess newer entrants to the market. So I see, your classic SMSF fund investments or investors that are looking, for 1.5 million and less. I see that market will be generally more affected with the high interest rates, only because lending restrictions will make access to funds more difficult. Rents basically can be divided into three categories, obviously. I'll talk about retail first. Retail has been very strong here in Brisbane and South East Queensland in the last sort of 18 months. I expect that to continue, particularly A and B grade stock. I've noticed that incentives have increased. I think COVID allowed a lot more people to enter the market due to increased incentives, but face rents have maintained their position here in South East Queensland. Those incentives will continue to get tighter, which will drive your effective rents up over time as we move away from the COVID era. And I think we're in great shape for retail here in South East Queensland, particularly with the population expanding. There's a lot of New South Wales, Victoria folks moving up here, bringing with them their business and their need for more services, and that's underpinning and driving our retail sector. Office. So office, unfortunately, is lagging behind the market significantly. COVID has really damaged, I suppose, the office market. It's just been another shock to the office market that we didn't need up here. As a result, office is lagging in face rent and also incentives. It's been a rough road. We are now past the worst. We are entering a better phase or better cycle now, but we are starting really at the bottom. Getting now to industrial, that's a really bright spot here in South East Queensland. Look, being an 8-hour flight away from Southeast Asia and things getting back to sort of some more relative normality after COVID, we're seeing baseline rents sort of start to fill in as you would expect. And that's driving the market here strongly. Investors from interstate are looking at our baseline rents and comparing it to the more mature markets of Sydney and Melbourne as an example, and realising that they've got good value, good equity value in those upticks in rents over the medium to long term. So in all, a bit of a mixed bag from a renting point of view, but in leasing, we're busy and we're being led very much by retail and industrial. So look, what do I think is going to happen in the election? I think it's too close to call. I think there's a bit of ambivalence generally in society about both major parties. I see probably the independents polling quite well. So whoever wins will have to deal with a pretty powerful and loud crossbench. So let the fireworks begin.